The real estate market is beginning to give mixed signals. Now, if you have been around this channel for any length of time, you know that pretty persistently, I think since the beginning, I've been bullish on real estate. I've really never changed that view. And so I would like to present some new data that's starting to come out that is looking both ways here. So I want to present both sides of the coin here, both sides of the argument, so you can make a more educated decision for yourself about whether you should be bullish on the real estate market, bearish on the real estate market, or somewhere in between. Keep in mind, this is all going to be US data. Unfortunately, there's just not the time or scope to do this for other markets. And plus, the United States market is very, very different than other markets. Specifically, one of the biggest reasons, if not the reason, is because of the 30-year fixed rate mortgage. It's virtually impossible to find anywhere else in the world. We've got some stuff going on across the pond right now in Europe that is very, very bearish for real estate, specifically because those loans, those mortgages get reset every certain number of years. In Europe, we've got lending markets close to seizing up because of the rapidly rising interest rates. There's about 2.1 trillion US dollars worth of debt secured against commercial property. About a fifth of that is going to mature this year. So in Europe, the real estate market does not look pretty. And I've said even for people in the United States that an adjustable rate mortgage is the very last thing that you should ever do. A fixed rate mortgage allows you to short the dollar. You owe back a specific number of dollars, regardless of what rates do throughout the next 30 years, and you're able to buy something that through inflation will go up in value. And if it's an asset, if you have tenants in there, that cash flows for you and covers your debt service costs. And so a fixed rate mortgage, especially a 30-year one, is a fantastic way to short a currency that's going to be going down in value. Not an adjustable rate mortgage, which is pretty much the only thing available in most parts of the world. But we have companies involved in real estate that are performing extremely poorly right now, specifically because of the US housing market. Redfin's shares are down significantly. Total volume for US home sales is expected to be down 18% during 2023. This is because both mortgage rates and home prices are higher, meaning that affordability is at a 15-year low. Now, this is very basically summarized the bearish case for US real estate, that nobody can afford to buy. And if nobody can afford to buy, prices are going to be tumbling down. However, right now, January 25th, 2023, pending home sales are actually increasing for the first time in more than a year. That's odd. Pending sales climbed almost 3%, and it was the first month-over-month increase since October of 2021. Now, I'll be the first to admit this is a small uptick on a downtrend, so that doesn't mean a reversal in the trend has happened. In addition to that, the situation varies from city to city. There's no such thing as the US real estate market. There are many real estate markets in the United States. So your city is very different to the city a few hundred miles away, even if it's in the same state. However, weekly mortgage demand has also jumped 7%. Now, you might be shocked to see this, that mortgage demand is going up, because we've all been hearing about how home prices are still sky high and how interest rates are still sky high. But you may not have been hearing, because the news hasn't really been covering it, mortgage rates have been slowly but surely dropping for months now. If you take a look at this chart of US weekly averages for the 30-year at 6.15% right now, you have to go all the way back to September to find mortgage rates that were higher. That means for anybody who bought a home during all of these months is now looking to refinance as rates are lower than where they originally purchased them at. And indeed, that is where the bulk of these mortgage applications come from, was from refinancing, which were up 15% compared to the previous week. Now, I've maintained, and I still believe it is an accurate opinion, that if you cannot afford to buy a house right now, then you likely cannot afford to rent a house right now, because rents are high, mortgage rates are high, home prices are high, there are a lot of people who simply cannot afford to lose their home. They're looking at the price of renting anywhere in their city. They're looking at the price of buying a new home anywhere in their city. And if they moved to do one of those two things, their monthly expenses would be so much higher that they would not be able to afford them. So there are many potential sellers that are literally locked into place, that if they lose their home, they will not be able to afford to live anywhere. And so the last thing they're gonna wanna give up is their current mortgage, because they bought it in 2020 or 2021 when rates were bottomed out, or they bought it way before when prices were low and they refinanced in 2020 or 2021. So the very fact that's preventing people from buying homes is also the same thing that's preventing people from selling homes. Because if you can't afford to buy a new home and you can't afford to rent a home, you also can't afford to lose your current one. But now let's take a look at some more statistics specifically regarding sales, housing starts, and housing construction to see what the future of the real estate market might hold for us. Number one, this is a chart of US existing home sales. Now you'll notice I'm very zoomed out here, and I like to do that to put things into perspective because yes, we might see a little tick up or a little tick down or a big surge over a few months, but we've got to keep things in perspective of the long-term view so that we don't make irrational decisions or irrational opinions. So since 1969 here, we can see there's been a very consistent trend up and to the right with big bursts up and big falls down. And one of those big ups and downs has happened very recently within the last few years. So obviously right now existing home sales are falling off of a cliff. Part of the reason for that is because a lot of buying happened during 2020 and 2021. That was buying that in normal conditions would not have happened. And so there was a lot of future sales that got pulled forward from the future into the present when purchasing power was so much increased from those lower rates and the prices hadn't gotten all the way up yet. So everybody was buying right now instead of waiting till later because now they can afford it, which means now they're not going to move later, or at least it'll take them a lot longer. And so you would expect after something like that home sales would drop off of a cliff because so many people already bought. Now there's another narrative going around right now that yes, we might have people locked in that can't sell, which means they're not going to be buying, but we have so many empty homes out there. All these home builders, they built neighborhoods and neighborhoods full of homes that are all empty now, and now that's going to contribute to a big housing crash. Well, let's look at the data instead of looking at the stories. This is a chart of housing starts. Again, long-term view. Do housing starts look anything out of the ordinary? If you were expecting to see massive construction take place, you would see housing starts be way up here. Even during the peak in 2020 and 2021, they never got anywhere near what they were in 2004 and 2005. By the time they even started to get close, it was already done and housing starts have fallen off of a cliff. So not only did we have a lost decade where there was virtually no construction happening relative to population growth in the United States, we also didn't ever catch up during 2020 or 2021. Yes, there were a growth in housing starts, nowhere near enough to compensate for the lack of housing starts over the past 12 years. And now that the market has completely turned around, builders have completely stopped building. And so it's not like they're going to continue to just build more homes when they already have some that are sitting empty. And housing starts is not even the best metric by itself because especially during 2020 and 2021, because of all the supply chain issues, you had major issues with housing being started and then they couldn't actually bring it to completion. And so a better indication, at least in conjunction with starts, is going to be housing completions. And here again, we are going back to 1980 to take a look at housing completions. Again, we are absolutely nowhere near the levels that we were at all the way from 1999 through 2007. From 99 to 2007, housing completions were above 1,500 here. And ever since 2008, they've been below. And from the years of 2008 through 2015, they were down here at, they bottomed out at 500,000. And now they're not even getting back up to the level that they were prior, all the way from 1999 through 2007. Despite the spike in housing starts, completions have never really moved. They have not caught up with population, so there's a big supply and demand mismatch, which is why rents are still high. Yes, depending on your city, you may start to see rent concessions. You may start to see first month free, things like that. But you're still not seeing rents come down to the point where it's cheaper for people to walk away from their homes, default, and just go rent for a few years. They'd be paying way more than they're paying right now. That indicates a supply and demand mismatch between the people who need a place to live versus the number of places that there are to live. Otherwise, if there were way too many places to live, then prices would be coming down to match. That's how supply and demand works. Of course, I could be completely wrong about this, and I am not making any investment recommendation or advice to anybody about whether you should or should not buy or sell any amount of real estate. I'm simply telling you the data that I'm seeing coming in and telling you my opinion about it. And obviously, if anything changes, I'll be the first to let you know. As always, thank you so much for watching. Have a great day.